saw was the main problem. Small caps still under a lot of pressure. Kevin Green joining me alongside Caroline Woods, our senior markets correspondent. KG, we got a little ramp there in the last hour. Again, it seems like bulls are unwilling to give this thing up just yet.
Yeah, definitely. Just seeing that positive close here for the S&P 500 was really encouraging, Oliver. When we were in the middle of the day, we only had two sectors that were really leading, and that was real estate, and then that was also consumer staples. But now we actually had a couple of others that were able to join the party too. So that broadening out, I think, is a good thing to see. And then obviously when you're talking about information technology and some of those technology stocks, they did catch a bid as well. We do have some key data points coming out tomorrow with services PMI. I think we got to keep our eye out on that, as well as the Bank of Canada and what the results or what the reaction is going to be in the dollar. I think that's going to be a key area. But we've had these sell-offs, and then we've had people coming in and buying these dips. And I think that's something that you just cannot ignore if you are a bear in this market that's trying to capitalize on maybe some of these fears of economic slowing.
Okay. I do think tomorrow is going to be notable that services arrive right after another bad manufacturing print. You know, we have a tendency to shrug off manufacturing. Services generally hit a little bit harder, Caroline, so that tomorrow could be a nice kind of prelude to all the jobs data Thursday, Friday.
Yeah, certainly any signs of contraction could be bad news, but we also have names like Lululemon tomorrow. We have Dollar Tree, some more reads on the consumer as well, which we know is such a big part of the economy, and the consumers have been spending because the jobs market has been so resilient. So it all kind of plays into each other. But yes, I don't know, to me it still very much feels like wait and see to Friday, but it'll be good to get some of these data points along the way.
Today found a little bit of a tech bid, but for most of the session it was generally kind of an unch. We'll see CrowdStrike this afternoon. I mean, this might be a little bit of a kind of important stock that I think maybe people forgot about this week because, you know, all the giants are behind us. But keep in mind, this is like the premier when it comes to cybersecurity. And a lot of these cloud companies over the last 2 weeks had a bit of a reset, CrowdStrike included. Shares up 98% in the last year. Even though it's maybe not a behemoth, a mega cap, it still is going to post like 30% plus growth. They're in the middle of transitioning into profitability over the last year. So does this have the ability to sway at least a decent chunk of tech and cloud companies, Kevin?
I think so, especially if you're looking at the Zscalers and the Palo Alto networks. I think that's going to be the key area that can push up here. Oliver, I think the quarter, obviously the bar is going to be fairly high. It is a premier name, as you talked about, or a premium name, as you talked about. I think the biggest fear, though, is going to be their backlog of orders, right? And if they're seeing an elongation of their sales cycle, like we've seen from pretty much every other cloud service or any SaaS company that's been out there, and if that's going to be the case, then we could have a little bit more of a conservative guidance moving forward. I think that's the biggest fear. Not so much the numbers for this quarter from top and bottom line, but what are they seeing in the forecast moving forward? And are they seeing some headwinds when it comes to enterprise spend?
Okay. And I mean, a lot of those names that you just mentioned have been under some pretty serious pressure. HPE too, which comes out, has basically been stagnant since its last earnings, which saw this monster rip. It was like all of a sudden we decided Hewlett Packard Enterprise belongs in the top tier, but it hasn't gone so great since then. Caroline, basically been stuck going sideways around $18.
Yeah, only up about 3.5% year to date heading into this report, up about 17% over the past 1 year. I will say, when I was comparing just kind of analyst coverage for HPE versus CrowdStrike heading into this report, CrowdStrike is very much the favorite. Not that you can compare necessarily cybersecurity with HPE, but very much the favorite. 94% of analysts have a buy rating on CrowdStrike. Meanwhile, there are 16 analysts that cover HPE. Only 4 have a buy rating on HPE. Median price target's 40 cents away from where it closed today at $18 a share. So I think based on what we heard from Dell with the AI server, obviously they had some AI server margin issues, but just the AI server demands could point to things being going in the positive direction for a company like HPE, but we'll have to see.
Well, this afternoon might just be better for the underdog, as HPE's up like 9% right now. And CrowdStrike is down about 10%, maybe not quite, about 8%. So Yeah, CrowdStrike down about 8%. Let's look at the numbers here. The revenue did beat estimates, 921 million versus 905. Easy beat there. Nice chunky little beat. Earnings too, 3 cents ahead, 93 cents versus 90 cents. Looking at the outlook, a bit of an uplift for the fiscal year from their previous guidance on the low end, but the high end didn't change a ton. They're saying 3.98 billion to 4.01. They had said 3.92 to 3.99, so they did lift their fiscal year outlook. Their adjusted earnings fiscal year outlook as well climbed fairly substantially. So this is where I'm kind of surprised that CrowdStrike got hit, because it looks like that earnings is somewhat of a priority for them right now, as there's a more notable lift, 393 to 403. They were expecting their EPS to stay below $4 and print as low as 377 for this fiscal year. Now they're saying minimum 393. So are we just like tired and beaten down from the last week? KG, what's wrong with this report?
Once again, I mean, it's been priced for perfection, Oliver. I think that's really kind of the reaction that you are seeing. When you're looking at the numbers on the headline standpoint, they're actually pretty good. You know, net new ARR grew 22% year over year. I think that came in line with the street's expectations. They're talking about the Falcon platform and how pretty much every customer segment is really getting onboarded onto that. I think that's also a decent sign here. I don't see anything that's really negative around this report. I don't know about the guidance and how it met the street's expectations, if it did or not. So maybe that's something that did come up a little bit light. But for the numbers that I do have right now, I mean, the margins look fairly solid, sitting at around 80% for subscription growth margins. That's pretty much in line with the street's expectations. I think this is actually a decent report. I just don't know too much about that guide, though. I'm just waiting for more information on that.
Okay. I mean, look, it seems like they're still cranking. I mean, the growth is good, 30% plus. Earnings too. What do you think, Caroline?
You know, I was combing through some of just the commentary in this earnings report just to see. It's all very positive in terms of the actual numbers. Look like they came in upbeat. So I think it could be, as Kevin said, just a matter of this is a stock that it's up, 20% year to date, but 100% over the past 1 year. Maybe a little bit priced too much for perfection, although I think once we can comb through these numbers a little bit more, maybe, you know, people are seeing something that I'm not right now, but I can't seem to find it based on the headlines.
Well, the estimates here, let me give you some estimates for what they were looking for, because I know I gave the numbers for CrowdStrike relative to what they had already projected. And I mean, they beat the estimates too. Street was only expecting them to guide for 25 fiscal year $3.94 EPS, and like I said, they're saying they could get to over $4. Revenue Street was looking for $3.97, so their low end is above that. I think basically, Caroline, it's just like the whisper, you know, the little bit of exhaustion here when you're trading at such high. I mean, these are nosebleed valuations in the sector, and CrowdStrike in particular. I mean, 70 times forward, basically.
I think also, you know, some of those estimates that you were giving off, I have actually seen a little bit lower than those as well. So it's even beating.
So just a tough crowd.
Yours were beating the higher expectations. And I will say the median price target going in implies, 30% upside from current levels. So I was thinking that this would be one that could potentially beat. That being said, I am seeing a little bit of a bounce now. I'm not seeing quite as steep as decline. So maybe it's just a matter of comparing those numbers to the actual estimates, and maybe we won't see the sell-off that we previously did. But yeah, no, based on the estimates that I'm seeing, this is very much a beat for both top and bottom line and the guidance.
Yeah, tough market. Okay, again, I mean, going into this, the forward valuation for CrowdStrike was like 75, and trailing is basically like Fugazi, you know, 1,000 or something. So HPE, maybe we give them a little bit more credit because they just smashed revenues, 7.2 to 6.8. Is this like new demand coming, KG? Is this an underappreciated AI player, perhaps?
I think this is probably a stock that's been beaten up because of all the other software stocks that have been selling off because they have not been able to provide strong guidance. HPE is not the one to do that. I mean, they actually smashed the guidance moving forward as well. Seeing Q3 adjusted earnings per share between 43 cents, 48 cents. Street was looking for 47 cents. Revenue for 7.4 billion to 7.8 billion. Street was looking for 7.46 billion. So they beat the top line estimate. Maybe a little bit light when you're looking at the Q3 adjusted earnings per share, but when you're also looking at the full year guide, that actually did exceed the street's expectations. They were looking for $1.85 to $1.95 for fiscal year 2025. Street's estimate were $1.89. Haven't been that many software names out there, Oliver, that have been able to beat and raise. So I think that's probably why you're seeing it catch a little bit of a bid. And once again, it saw some headwinds, especially after that sell-off that we saw from HPQ, which is still trades kind of in line with that company as well.
Yeah, maybe a little switcheroo. You know, the beaten down underperformer gets the love. I mean, that's kind of the nature of it to some extent at this point when market's looking for new trades, Carolina. Maybe HPE suddenly, does belong in the higher ranks.
Well, it certainly looks like it's going to be in favor after this report. I do think it's important to note, Kevin had mentioned that guide topped Wall Street's expectations. And Kevin, I think you said also they actually raised it because I was taking a look at the previous outlook for the full year. It was adjusted EPS of $1.82 to $1.92. So the fact that they're now at $1.85 to $1.95 is also raising, which I think is important to note. So beat and raise, as Kevin, I believe you said. But yeah, I mean, we'll have to see. I do think it's important to note Crowdstrike has come back a little bit, still in the red, but not nearly as steep of declines as we initially saw. So tomorrow should be interesting.
Yeah, that makes more sense. Now only down by 1% or 2%. So, kind of a fast sell-off there that didn't quite seem commensurate with the numbers. So, HPE is picking up the server demand. You know, I kind of think about it as sort of like a related stock to like what we've seen with Dell and stuff. So, not crazy to loop those two together. Give you last thought, Kevin?
Well, yeah, HPE is going to be on the software side rather than like HPQ.
A lot of server demand.
Hardware and server side. Right. Yeah. But software side, right, for server, they did kind of call out the stronger AI systems order conversion. So they are seeing some decent orders in their backlog, and which is why they actually did adjust their guidance to the upside when it comes to revenue. I think that's a really good sign. And they also talked about cost cutting measures or cost discipline, if you will, and maybe trying to preserve some of those margins. That did not that's not reflected in the Q3 guide that they provided. Came up a little bit light, but it is reflected when you're looking at fiscal year 2025. And I think that's actually very telling for them. They're trying to right size their business, and they do believe that they're going to be able to bring a lot of these customers into the fold here, into their product suite by fiscal year 2025. I think that's a win. So it's a nice pop to the upside here.
Okay. All right. And we might be able to get them both up if Crowdstrike keeps firming up here. So solid reports for sure. I don't think there's anything really wrong in these reports. Just kind of a test of the market's appetite for this category of business. Thanks, Caroline Woods and Kevin Green.